My 2 cents on the Ether US dollar chart. It's 4 p.m. Good afternoon and good morning, dear college students, and welcome to Unfair Crypto Advantage. I was asked to take a look at the Ether US dollar chart, and I will do so, and risking of stating the obvious, that's my opinion about it. This is not, my opinion is well educated, but this is not financial advice in any way or form. Okay, let's have a look. Well, first of all, this is one of the really rare occurrences where you have this emergency brake spike in volume. Do you see this? Normally the market crashes. And you have this really high spike, and then the way down is over. And this is usually where I go long when I make a decision based on the trading volume. So this is where I usually go long, and the market didn't went what I would expect. If today would be 17th of May, the Friday of the 17th of May, what I would expect is that this happens here. Let me write this. That this happens here. After this breaking spike, as I call it, market goes down, volume goes up because a lot of stop losses are triggered, and then a lot of buying orders are triggered because the price is so low. So this is what I would have expected. But in this rare case, markets went sideways for 1, 2. Oh well, this was 2,100. This was 2,700. Maybe if I would have used a trailing stop, it could have worked. But 1, 2, 3, 4, 5, 6, 7, 8 weeks, 9 weeks more sideways and down. 9 weeks more sideways and down, from 2,116 to 2,900 roughly at the closing point. So this is really rare that this doesn't work, but this is the proof that it doesn't work. Okay, what you have here is the same as last week, or the same as ever. The blue line is the 21-week EMA, and the EMA, exponential moving average. The red line is the 20-week moving average. They basically do the same, but the 21-week EMA comes a little bit earlier. It changes a little bit earlier. And there you have it again. We try our Ben Cohen trading thing. So when the week closes about 21-week EMA, we are ready. We get ready in. We are ready to get in. We are ready to get in. And then we wait till the next week if it opens at or above the 21-week EMA, and this would have been the case here. Problem is when this week opens, we don't have the blue line, but so we just see what we have of the blue line. This piece of the blue line is plotted when this candle opens. So we just have a look. Is it roughly okay? And when it's roughly okay, we go in. And now we say, we take the worst possible quotes. This is 25.58, and then we exit first time the 21 EMA is touched. We would have exited here, and we would have actually made almost no profit. 25.58 to 26.50, so it's roughly $100 per ETH. That would have been a profit. But take this with a grain of salt. I take the worst combination of exit and entry point. If we take the best combination of exit and entry point, the best combination roughly 22, and we would have gone out. Here. When the market closes the first, here, 22 to 800, roughly 800, roughly $800. Okay, what I'm expecting right now is not much. Stochastic auf Deutsch, means that the market is quite oversold. This is good. MACD still on the way back to recover. So no buying signal here. If you're a short seller, I think this, I wouldn't be too brave. Because stochastics is under the 20% line, and this is I wouldn't dare. But my opinion. DYOR, do your own research. Okay, now we switch to the 1 day chart, and we make it a little bit to the daily chart. Okay, this looks quite interesting. We make a channel. We make a channel because I want to have a look at this. I'm looking to find these two lows to get in these two lows and this one, and yeah. Okay. Risking of stating the obvious, the downward trend of this channel is now broken. So there's always a discussion if you really take the lowest lows or if you take the closing points. And if I tend to take the closings, so this would be in this area and in this area. And therefore you could see that this downward channel is broken, and this was what was the resistance before is now the support line. But we all know that chart analysis is some sort of bullshit, but it works quite well. But there's really no mathematical background to it yet. I think the first thing that could be proven of being correct is really the Fibonacci scale, because this is the most mathematical touch point to it. But the other thing is just pattern. Our brain functions like a pattern comparison machine, and this is why charting works, why chart analysis works, because we are looking for pattern. And if enough people search for the same pattern, they will behave like this, and then we can trade this. Okay, so back to the weekly chart. And we have the same channel in the weekly chart, so we make it a little bit bigger. And we try to do the same channel at the weekly chart. And even here you see it a little bit like it's supposed to be. Good. The support levels are around here. These were the old lowest lows. The old lowest lows were here, and this worked perfectly as a support. So we have room till the 1700s, which is from today's perspective about 25% and a little less. And on the upside, we could go to the new heights. But As stated before, I don't like the MACD and I don't like the stochastics. Well, I basically like the stochastics, and but I don't like the MACD. It needs a few more weeks to get ripe. So now we are. Let's have a look at the Lux algorithms. Sorry. So next one, Bancone, the same, and the Lux algorithm, and from Lux algorithm, we still have the same. These are a little bit a fancier version. It's still on the way down. This is still on the way down, not in the buying area, and we don't have a buying signal yet. Okay, that's it. Thank you very much, and hear the song that follows.
This is not financial advice. I am not a financial advisor. I'm only sharing what I've learned. Whatever you do's at your own risk. My friend, you know you could lose all your money. Just be careful, you could get burned.